Okay. And I'll send everyone a copy of the recording a little bit later this afternoon. If anyone has to leave early, or some people can't make it, so they're relying on the recording. So, but end of year seasonal pattern, which is one we've been, like I said, we've been trading for a long, long time. First learned about this back when we were doing stuff with Optionetics, and they had those Oasis conventions locally over in Santa Clara, the convention center. That's when myself and Becky first started looking at seasonals and trading seasonal patterns. And once we understood seasonal patterns and then tied that to our trading strategies, it was like, wow, because if certain things are expected to go up or down a certain part of the year, we've done it with commodities also. And then we have our trade signals, which are already 80 to 90% wins. But when we get our 80 to 90% winning trade signals in conjunction with the seasonal patterns, which are confirmed to be in play, then our 80 to 90% goes up to 90 to high 90% wins. It's just ridiculous how knowing seasonal patterns, when you combine that with technicals, it just supercharges your profitability. And I'll show you those kind of results in a few minutes. All right. For those new people to the meetup, these are the only sectors we trade. And with these ETFs, there are probably 1,000 different ETFs or more. But this grouping of ETFs have enough option volume and open interest to be able to trade these ETF with options. If we were buying just shares of the ETFs, then we'd have a lot more choices. We can for all these different sectors. But if we want to trade options, there might be 1,000 ETFs, but 900 something of them you can't really trade options on because there's just not enough option volume or open interest in those ETFs. But this group represents a broad sector of sectors and gives us a lot of flexibility if you want to specialize in one area or if you want to trade a little bit of everything. So it gives you very much the ability to diversify. So let's go through one of the major patterns we see. So this is what we kind of look at each month to see what's the major market should look like. And then we kind of trade, and I personally trade in sync with the seasonal patterns. But let's go to the end of the year where we are right now. September, October, November. So this is a composite chart. You'll find this at seasonaltrader.com. It is Jake Bernstein's seasonal trader site. First learned about this from Jake, at least as far as the charts go. The actual seasonal pattern we learned way back when, but Jake on Seasonal Trader provided this visual for us, which is very easy to access and utilize in our trading. So we use this to give us a visual as to when is the best time to trade certain markets relative to other times. Our win losses percentage is great no matter what, but I'd rather be able to get a nice return on my money faster than have it go against me for a while. And then, so this is what lets us give us an extra edge. So I started October, mid-October, second week, third week of October is when we expect a bullish pattern that lasts into December. Okay. So I'm going to switch over to my website real briefly just to show you the files there, because you're going to want to access those and download those files from the site. Okay, here's my website. It's my trading website. Homepage, a little bit about me. Podcast that I did a little while back where I was expecting an ambush, but they didn't ambush me, but they asked me anything and I answered them honestly in real time, whatever they asked. So it's a good one to watch. Sectors again, couple of videos, and 1 year of trades is on this chart. where we put all trades for NASDAQ in 1 year, and it came out to 90-something% wins, long and short. So it's good to see it on a chart once. So someone was only interested in trading NASDAQ only and nothing else. So I'm like, okay, but you won't have very many trades. They didn't care. All they wanted were winning trades. So we put all the trades. So just out of curiosity, I put all the trades on one chart, and it was 90-something% wins. But this is every trade for 1 year on the NASDAQ in 2020. So, and it's pretty much similar every year. It doesn't really change very much. But you want to go to the valid trades win-loss, and these spreadsheets here, this is what we're going to look at today with the seasonal pattern with trades that become valid between September and November. This spreadsheet is a listing of all of the trades that have been valid this year in all of our ETFs. And this is a listing of all the trades on just the Dow, NASDAQ, and S&P, which is that grouping of just the major indices gives us our best results no matter what. And this is a listing of weekly trades. And we're going to so we have different listings available that go back years, basically. So it's not just a short term. Our actual stats date back to 2006 for the ETF, some of them to 1999 for the ETFs. So our stats are not just for a few years. We might only make available to you here a few years worth of information, but the stats we show you date back to 2006 or 1999 in real life. Okay, so those are the ones you want to be able to reference those spreadsheets. And here's the handout for today. I'm going to switch back to the handout now briefly, and then we'll look at some live charts. All right, so, okay, and share. All right. So this is probably the single biggest notable repeatable trend. This is 30-something years worth of market data put onto one composite chart. Okay. And for the question, what triggers do you use to alert you to get in? Those are the trading strategies that I know you have seen previously, at least one or two of them. And those give us our buy signals, and I'll go through a spreadsheet that shows you all of them in just a little bit. So I started getting my long trades on right in this area, and they've already started moving up. So some trades have already started hitting. I'm looking for any pullback and new buy signals, but this move up from October through November is what I'm looking for. And it's so definitive. That's why it's my favorite time of year. So I'm going to switch over. I'm going to get right to the numbers right away, and then we'll look at one of the strategies that allow us to capitalize on that. Which ETF in your list are you betting on, and why? The major indices, Dow, NASDAQ, S&P are number one no matter what. Dow, NASDAQ, and S&P, that would be the Qs, that would be SPY, that would be DIA, that would be XLI, that would be XLK. Those are the ones that represent the indices, and those are the absolute best no matter what. I think you might have seen one of the previous presentations I did answering the question, where I just focus on the Dow, NASDAQ, and S&P and nothing else. Those provide you 90-something% wins no matter what on the long side. So those are the best no matter what. However, let's take a look. So what we're looking at today is this period from the middle of September until the middle of November. So what we're looking at is, what if we get buy signals on our trade strategies anywhere from mid-September to mid-November, giving us a chance to capitalize on this move in October and November and into December. So we want to get our trades on sometime between September and November to capitalize on this extra move. So that's what we're going to look at, just this period. All trades for the whole year are on the website. All trades going back years are on the website. But today we're focusing on this, just this seasonal pattern here, and seeing how it stands out against everything else. All right. So now I'm going to switch to share again. If you have any questions along the way, just go ahead and don't raise your hand, just unmute, ask a question, or type it into the chat window, and I'll eventually see it there. Okay, and now what I'm sharing right now goes back to the middle of September in 2019. We just did like 5 or 6 years worth of trades, but I said we have it all the way back to 1999 or 2006-ish, depending on the ETF. This is our entire list of ETFs, okay? The whole list of ETFs which we trade and every strategy we trade. All right, these are all the trades in between which became valid. These are different strategies. These are all the trades which became valid from September 15th to November 15th. And we have the whole listing from 2019 until the end of September. Okay, we ended it at September because the next update will be the end of October. So just to give you a number here, here are all the sectors. And here is our win-loss stats. 97% winning trades on the long side. 300 trades, 97% wins on the long side. Okay. Realistically, this would actually be a higher number than 97%. Why I say that? Because a lot of the losses that happened were not in indices sectors that actually track the major markets like GDX, gold mining companies. They don't move with their overall market. Once again, GDX doesn't move with the overall market. GDX doesn't move with the overall market. Oil, XOP, doesn't move with the overall market. USO, oil, doesn't move with. So most of the losses that actually happened during that time were not sectors that move with the overall market. Okay. Energy. So realistically, this would be more like 99% wins. Realistically, it's more like 99% wins on the long side with our trading strategies if you don't do like oil and like metals and stuff, because they are not in sync with the overall market. Most of the other sectors are. When I like to show this, because a lot of people don't realize how powerful it is to know your numbers and statistics. Given a choice of trading one of these strategies which become valid on the long side, or trading a short. These are all the short trades, okay, between 2019 and September 2024. Overall, 83% wins. Short trades valid between September 15th and November 15th. Huge, huge difference in percentage. For those of you who already trade our strategies, you know that 84% wins is our low end acceptable. All right. So you could do nothing but go long and you'd be very happy between September 15th and November 15th, that seasonal pattern. But you won't know that unless you see the numbers. There's nothing like this would be profitable, you know, but nowhere near as profitable as 97% wins. Okay, nowhere near. And like I said, 97% wins is more realistically 99, because we left everything in. We'll give you worst case scenario. So realistically, you know, oil and metals don't directly track with the major indices. So they wouldn't even be included, but it's part of that. We left everything in, so we get a worst case scenario. Any questions so far on anything as we go along, anything at all? But I want you to see these numbers, to see the power of just that, this end of year seasonal. Any questions? All right, ask anything you want. It's during meetups, I'll answer whatever question you want. So let's take a look at the chart. And there's one strategy I usually show, that's the Donchian cross. It's one of several. This Donchian cross is one of several that I show, but we're going to take a look at, there are more wins than what you see here because there have been more trades valid. Okay. So I'm going to now bring up the full list, not just between those months, between those two dates, but I'm going to switch over to, I'm going to switch to the chart, and we're going to look at other trades. Let's see, hang on a second. And share. Okay, what you're seeing here now is not just between those dates, but the entire 2024. There have been more recent trades. Okay, this is all of 2024. All of 24, we've had this outstanding, ridiculously good year of trading so far. Overall, 89% wins, long and short. 95% wins on the long side. 83% wins on the short side. Okay. This year has just been strangely very good, way better than usual, actually. We usually average like 80-something% wins on the long side, 80-something% wins on the short side. But this year has just been outstanding for our trading. So, but that's following a plan. That's trading your strategies when they become valid. There's no guessing. We follow rules, and that's how we trade. So I want to take a look at this. Is one strategy that many of you have seen before. That's a Donchian cross. So you'll take a look at a recent trade, but let me show you how that also works. I'm going to change the share, give you a sample trading plan and stats, and then, so some of you know this, some of you seeing it for the first time. We're going to look at the Donchian crossover buy. That's one of our group of strategies. We don't just trade one strategy, we trade a group of strategies. One strategy might get you in down here. Another one gets you in after the trend starts to move, the market starts to move up. And then another one gets you in once the trend is established and takes you higher. We'll have one short strategy that gets you in at the very top. A short strategy gets you in once it's in progress, the move down, and one that gets you in once we do a major breakout and breakdown to even for more continuation. So we have no one trade gets you everything you want. That's why, well, no one strategy. That's why we have multiple strategies that gets you into trades at different times on different symbols. So you can trade everything going from the bottom up, from the top down. Finding market tops is not that hard. Finding market bottoms is not that hard. You just need someone to show you, basically, and most people won't show you. Some of the people myself and Becky learned from, I had made a list of those people, but a lot of them who we learned from, along the way, they became like certified analysts and that type of thing, and then were no longer allowed legally to share the details of the strategies they were using. But before they became certified, they could share freely with us the details of what they did and how they did analysis. And luckily, we learned from these people at that point in time. So that knowledge is in us. Now you can buy from them trade signals and stuff like that, but they can't, or buy a book or something, but they can't teach you the real true details of what they do, because legally they can't, because they could become certified professionals, and then the legal stuff changes. But people like Daniel Gramza is the one who showed us how to really maximize profits on trades and how to determine what our stops would be. following what he showed us, we determined what our stops should be in order to achieve the profit level we wanted. I met him a couple of years ago, probably about 5, 6 years ago. He was in a convention here in Santa Clara. And I told him that I'd actually adapted what he did, and he was shocked. He said most people wouldn't do that because there's a lot of work involved, and most people don't want to do that type of work. But it works. He's like, I told him, yeah, myself and Becky, we saw what you were doing, and it was worth the time and effort. And we put in a lot of time and effort to make this work. But it works. John Carter, Hubert Center is one of our first few people we learned from, and we trade the concepts we learned from them a long time ago. John Bollinger Bands, David Elliott, one of the first people who shared his knowledge with us day in and day out and was totally committed to teaching people what he did. He passed away a while back, but even on his deathbed, so to speak, literally, he insisted on doing live reviews of the market because it's what he did. That was his way of giving back to people, and was analyzing the markets and helping people make money. That was his way of giving back. He did it till the end. That was David Elliott. Price Headley, Woody of Woody's CCI. When I first saw Woody was at a Traders Expo, he kept saying, "Come see my new indicator." I'm like, "Ugh. Come see my." Next thing you know, we're actually in with Woody, and next thing you know, we're actually using it, and then it became part of our stuff. And it was like, wow, you know. But people you meet who are up and coming, they have a thing and they're trying to sell it, and next thing you know, it's like, you know, that was actually pretty good. But that was Woody. Oliver Perez, if you see a 40-period moving average on any of our charts, which is all the charts, got that from Oliver. John Persons and Jake Bernstein, of course, Linda Rashke and Steve Nissan. Candlesticks. He brought candlesticks to the Western society, and you know, and they've been in use for decades now. And there are a few others. Steve Bigelow, W.D. Gann, did a lot of GAN analysis and studying that. You'll see price and time as part of every strategy we do. Time is a factor. And Ron Ianieri, he was at Options University, I think, and he helped us with a lot of some more advanced strategies back when we were spread trading. But those are just a sampling of the people we learned from. So everything you see us do is taking knowledge gained from all those people and more, and that's been incorporated into what we do. So it's not just one thing we do. We take knowledge and applied it, and you'll see it built into everything we do. All right. Once again, any questions you have, just stop me. Okay, so here are the sectors we trade. Again, I want you to see the kind of percentage of wins we expect. Squeeze play sector sell, squeeze play sector buy. If it's in light blue, it means it's 84% or higher. These particular strategies only focus on the Dow, Nasdaq, and S&P. That's it. That's where they're most effective, the major markets. So I know for a fact when I get one of these trade signals valid on DIA, SPY, or QQQ, I'm looking to trade it because we're averaging 90-something% wins, up to 98% wins. It's that powerful a strategy. But once again, this is applying knowledge gain to develop this strategy. I develop all these strategies, so work with Becky to back test, make sure everything is right. Remember, just because something back tests well doesn't mean it works in real life. The only way to know that is to trade it. So back testing is great, but you have to actually trade it. Because there are nuances, especially with options, you don't realize because options expire, options decay in value. So the only way to know it works is by trading it and know that your trade management works given the parameters you're using. So everything we do, we trade and we know it works because we've been doing it for a long time. All right, these are two of the strategies. Another one of the strategies we trade, the stats. This one expiration cycle for expiration cycle tells us how much time we need in the option to achieve these win-loss percentages. So there's no guessing as to if we need one month of time or 2 months of time or 3. We know exactly how much time we need in the option before expiration to be able to achieve these win-loss percentages. We know if we get a buy signal, EWG, which is Germany, we're not going to do one expiration cycle of time, we're going to do 2. because we don't touch anything under 84% wins. We have a certain margin of error we actually factor in. 84 is our minimum acceptable to even look at or consider. But just having one extra month of time increases the win-loss percentage by 10% by having one more month of time. And that is something you can find out by putting in the time and effort, the thing that Daniel Gramsci didn't think people would be willing to do. But we did. We put in time and effort to get this information so we know how much time we need in the option. The more time, the higher the cost, the premium of the option. We also have a method of determining how much is too much, so that I share with coaching clients. You might find it in some of my older videos from way back from years ago, but usually share that with coaching clients. And that's a T-line buy, and here's the T-line sell. And these are the numbers. Another one, hook buy, Donchian hook. Once again, one expiration cycle of time, two expiration cycles of time. If we want 100% wins, okay? We know how much time we need to achieve these numbers. So Becky maintains all these stats every month, and we send this out to coaching clients. Each update every 3 months, we update the stats, send out to coaching clients. So if you're going to trade these strategies, you need these numbers. You have to have this, because if you don't have this and you get a trade valid on EW, let's say EM, emerging markets, and you don't know how much time to put into it, whether to consider it or not, if it's going to make you money, and you just don't know without the numbers, okay? Or how much time, you're just guessing. So having this is what we maintain. So that's how we know we're consistently profitable. This is the one we use. This is usually our very, very first buy signal. This is the one that gets us into market bottoms. This gets us into market bottom. When you see the market dropping, this is usually our first buy signal. So if you see Ichimoku hook anywhere on the trade listing, this is this strategy. And these are the ETFs we trade with it, because they give us the over 84% wins on finding market bottoms. This is the one we use for market tops. Like I said, it's not that hard to find market tops, but you have to have a strategy that clearly identifies it, and this one does. So this is the one we use for market tops. And you can see the numbers involved there. This is for the weekly charts. So let's take a quick look at the markets now. And that's the trading plan, sample plan. But so we have multiple strategies, not just one. No one strategy gets you everything or can accomplish everything. All right. Some of you know this strategy, the Donchian cross. The orange line is the Donchian mean line. Right now we're looking at S&P, SPY. This is the Donchian mean line from the Donchian channel indicator. This is the 40-period moving average, the one I told you about we got from Oliver Velez. It's on all of our charts. This is the upper Bollinger Band. So 40, Donchian mean line, upper Bollinger Band. All right.
Hello,
Yeah. Okay.
Eversley. Which strategy was the one that works for market tops?
The squeeze sell, ETF squeeze
Squeeze
sell.
sell. Oh,
Yeah. And then there's another one, the squeeze play sell. The squeeze play sell. That's one of the newer ones that's in your plan, the squeeze play sell also. That gets you not at the top, but it'll be the next. The ETF squeeze will get you in at the very top, and as the market start going down a little bit, then it'll be the squeeze play next, and then as it goes down some more, it'll be the T-line sell. So those three get you into the sell side in that order usually. Some people don't like the ETF squeeze sell because it can go against you a little bit.
Yeah, I've had that experience and it is confusing because usually when you're talking about squeezes, it usually means that it's just it's a quick move that is the squeeze, and then it reverses.
but it can also be the top.
Mm.
So a lot of them are quick moves. It'll market be going up, and then it squeeze sell, boom, it goes back up. Hit the target, goes back up. Next one, squeeze sell, boom, hits the target, goes back up. Next one, squeeze sell, hits the target and drops. And we never know when the big drop is going to be. That was literally 2020, the beginning of 2020. We had some squeeze plays that were going against you to a point where they were about to expire worthless, and you're stressing, and all of a sudden you're getting a 60-70% return to first target, because once it dropped, it just dropped, and volatility just amped up the premium in those options. But with gap after gap, because when it falls hard, and volatility helps us. But yes, they might go against you for a while, but then the overall win-loss percentages still works out, and as it falls, the volatility puts the premium back into the option value. So it's actually pretty okay. So, for this strategy, we're looking for the orange line to cross above the blue line. So when we do our daily review, all we're looking for are two lines to cross. This is just for the Donchian cross. I don't have everything on the chart here for the other strategies. I'm just looking at Donchian cross. Boom, then cross, then cross, then cross. Hey, it crossed. Okay. Once it crosses on SPY, I would then go to my trading plan, and I would see that based upon this cross and the trigger criteria, I see I have a valid trade here. Now, here is where all the stats come into play. I look at my trading plan. I know that when this happens, I'm going to switch back to the trading plan real briefly. So you can see that again, share. I go to my trading plan, my setup. This is Jake Bernstein terminology, setup, trigger, trade management. I see the two lines cross. Okay. Mean line crosses over the 40 SMA. I look at the trigger, I verify number of days that was previous bearish cross, and it must close below the upper Bollinger Band. The rest is trade management. This is what I spend all my time on coaching, is how to manage the trade, place the trade, that type of thing. I just put it in two quick, sentences here, but this is what most of our time is really spent on, the trade management. So now we switch back to the chart. Here. Share that again. SPY, yeah. Okay, here we are. So I verified the setup is valid. I verified my trading plan, that the trigger is valid, everything is valid. And then on the trading plan, what I'll see are those stat sheets that shows you the win-loss percentages, and I'll look for the Donchian cross, and I'll see that the strategy has an over 84% winning trades. For one ATR for one expiration cycle, which is basically 1 month, or for two expiration cycles, which is basically 2 months. Most of the things we release is based on 2 months. That's why that's the sweet spot to get the best results. So I know that I have at least an 85, 88% wins, or even higher chance percentage wins if I buy an option 2 months out. So that would be, this is August, so this would be a November option. So I need 2 full cycles. I'll explain that at a later time, but this would be a November option at the earliest. Okay. So I'm buying a November option. It's valid 8/30. I'm buying a November option. Now, someone grab a calculator. I'm going to ask you to calculate some numbers for me. The ATR for this day is 6.640. ATR is measure of volatility of the ETF. That's telling me how much this ETF is moving, and I use a 5-period ATR, which is how much is moving on average every 5 days. On this day, the ATR is 6.4, $6.40. On average, SPY, S&P 500 is moving $6.40 every 5 days on average. Okay, we'll even type that in. DR 6.40. The next day, the market opened at 560.47. Open 560.47. What is 560.47 plus 6.40? So I'm adding the ATR from the day we got our trade signal, which is this when these two lines cross, to the next day's opening price. So I need someone to give me a number. 560.47 and add 6.40 to it. What is that number? Type it into the chat window, please. 560.47 plus 6.40. 560.47 plus 6.40. Is that a number for me? Anyone? 560.47 plus 6.40. Okay. Thank you, Olga. 566.87. That's our profit objective. We do our profit objective based on volatility, not volatility of an option. We're not doing option analysis. We're not doing that complex stuff. We're doing analysis on the underlying ETF, and we're using options to capitalize on the volatility of the ETF and to capitalize on the directional strategy. So we have the volatility of the ETF, which is the ATR, to tell us how big a move to expect. And we have the technical strategies to tell you which direction. So there's a long straight. This is telling me that I have an 85 to 90 something percent probability of SPY moving up $6.40 up to reach a price of 566.87 sometime within the next 2 months. That's what this is telling me. Okay. So what I want to do is buy a call option at or below the open price this next day. So if it's 560, if it opened at 560.47, I'd be buying a 560 call option for November. And if you look at the stats, you can probably do one for October also, depending on the stats. So it'd be October on November, 560 call option, depending on the win-loss stats, if it's over 84%. Okay. So with a trade like this, goes against you for about a week or two, you're looking at maybe a 15 to 20 something percent return at the first target. Okay. Just getting in there. And at 80 something percent wins, the money just sort of adds up as long as you're consistent. We're just talking the first target only. We're not talking about trailing stops and scaling out of position. We're just talking basic all in, all out. Okay. Now, back to reality now. Not everyone's going to be up the next morning getting in right at the open. I don't do that. I haven't done that in a long time. I know the entry is at or below this open price. Personally, I'm willing to miss a couple of good trades that just sort of open and take off. And I would prefer to get in as the market pulls back and give me an even bigger profit target. Well, let's take this day right here. This went, entry price supposed to be 560.47 right at the open, but it went as low as 549. Let's say this day I'm not at the open, but sometime during this day, I see a big, nice pullback. So now I can get in at a better price than expected. I was supposed to get in at 560, but hey, the market's dropping. Let me get in at 555. I see it drop all the way down to 555. That means I'm getting in 5 points better than expected. So let's say I get in at 555. My target is still the same. My target is still 566.87. Okay. But now I'm getting in my new entry price. I didn't get into this trade. I wasn't rushing. If you're rushing, you want to get over. Your life has stuff that you can't get to the computer. You got work, you got family stuff to do. You get up at whatever time you get up. You don't have to rush there to be at the open. A lot of people can't do that. It's not realistic. But by the time you got up, got to your computer or whatever, it was the market had dropped. It's now at 555. So I'm going to type in new entry. Entry 555.00. So now I'm getting in when SPY is at 555 rather than at the open at 560.47. If 566.87 is still the target, what's the difference between 566.87 and 555? Give me a difference between those two numbers. Someone? Difference between 566.87 and 555. How big's that difference? Difference between, so 566.87 minus 555. Thank you, Connie. 11.87. By getting in at 555 rather than the open, instead of having a target that was $6.40, I now have a target that's $11.87. When this will eventually hit my target, okay? But because I have options that expire out in November. Didn't take that long. And by the way, these trades we didn't show on that spreadsheet because it didn't happen between the 15th, but there have been more winning trades even since that's not even on that spreadsheet. We've had much more wins. The other trades became valid. But I said if we got in up here, we'd be looking at maybe a 15 to 20 something percent return. By getting in down here, now we're looking at a 50 to 60 something percent return at the first target. Because we got it at a much better price and we going to be 11 points in the money by the time we get to our target. We could have gotten in even lower. This went all the way down to 530 something. You could have gotten in 10 points lower at 545 because the reality is you didn't get to it. You can't be in every trade. You didn't have funds freed up. Any reason at all. You got into other trades that tied up capital. You didn't want to risk more capital, but you got out of something, freed up capital. You look back, you see, hey, there was a trade valid over here that I'm not in, but a really good price right now. Seeing this would scare people. For us, it's like it's a better entry. Our win-loss percentage doesn't change. People will see, oh, it's good. People thinking, oh, the market's gonna keep falling forever. We're gonna keep falling forever. No. They'll try to make you believe that on the news and stuff, but no. It just means if we took a loss, it just means we would have lost the exact same amount of money we would have lost if we got in up here and it didn't go up. So our losses don't change. What changes how much money we make. If we got in here, if let's say we're risking $1,000, if we got in here and it kept going down, we're gonna lose $1,000. We got in here and it kept going down, we're gonna lose $1,000. You got in here and it kept going down, we're gonna lose $1,000. But get in here and it goes up, you make 15, 20 something percent. You get in down here and it goes up, you make 40, 50, 60 something percent. You get in down here and it goes up, you're gonna double your money. Okay. So you control your risk, how much you can lose. But you also can, by the more patient you are, the more relaxed you are, you also change how much you can make. By getting in at a better price, the probability of reaching this target doesn't change. Your target is 566.87. That happened right about, let's see, that high is, so that happened here. All right. So that happened on this day is when the target was reached. Whether you get in here, here, down here, on any of these days, that's as long as it's below the entry price. So you had 1, 2, 3, 4, 5, 6, 7, 8 beginning of this day, 9 days. You had 9 days to enter 8 points, let's say 8 full days to enter this trade. As long as you're entering below the open, you had 8 days to get into this trade. So you don't have to rush there the next morning or anything. You have 8 days. Some trades you're going to miss because this market's going to open, it's going to take off, you're going to miss it. Big deal. One win here is equal to 3 or 4 wins here. That's the power of being patient sometimes. You make so much more money. So I don't do a lot of trades. I do quality trades. I time my trades. I wait for better opportunities, so I have much bigger targets. I've been averaging 60 to 80 something percent return or higher on my first target trades because I get in at such a much better price. So my wins are much bigger, but my losses are set. So I control my losses, but now I'm trying to control my wins a lot more by being patient and getting in at a much better price than expected. All right. And this setup happens over and over again on every ETF. I pull up recently TLT, interest rate futures, or ETF. 1, 2, 3, 4, 5, 6. Yeah. Bullish cross, orange line crosses above the blue line. I know some people took this trade, got a nice return on it. The options are not that expensive, so it's very tradable. And what's beautiful about this one was gap, 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 gap. The gaps just magnifies profitability. Just as soon as you start hitting those first targets, if you, the number one, it'll gap into the first target with a nice big profit to begin with. But if you are trailing stops and remaining contracts, with every gap, you're gonna double, triple your money on remaining contracts because of the gaps. It just, you never know when those gaps will happen, but when they do, it's like cha-ching. It's just nice. Let's see what oil was doing. Let's take a look at oil and energy. USO. That was just this weekend. Mean 73. Look what has happened this weekend. We got a bullish cross on US oil. So this would be on our listing for this weekend as a valid potential trade because the orange line crossed over the blue line. So there's going to be someone along the way who'll help me with what the win-loss percentage is. Well, email me later and I'll tell you that, but not in the meetup. But this is valid this weekend. Take a look at energy. Some of you who are already coaching clients, you have the information, so you guys already know. You can look that up. Let's see, this cross, this is energy XLE. This cross happened on Thursday, so it hasn't hit a target yet. So this trade's in play. So you'd have to get in if the open price of XLE on Friday was 93.10. You'd have to enter this trade when it drops, if and when it drops back below 93.10 and a target hasn't been reached yet, but that's when the cross happened. Cross happened on Thursday, 10-3. That's a valid trade. And then here we are, trades in progress. So for those trading XLE with a Don Chain cross, current coaching clients, that's options that they would have gotten this week or this past week. Take a look at anything else. Home builders, XHB. What do we have on home builders? The last one was a while ago, a couple months. IWM, Russell. We had to cross, that was on 9/4, it looks like, went against for a week or so, and then took off, already hit the target. So if this pulls back again, and then look for another buy signal going into like, so I'm still looking for markets to, if for some of these markets, if they pull back and give me another buy signal, but we have other trade setups that will give us also buy signals. So right now I'm only taking buy signals because of the extraordinarily high win-loss percentage during this time of year. I'm focusing on the long side. I might, if I get like 7 or 8 buy signals, and one sell. I might take one sell just as a little hedge, but if something pulls back. But my focus is going to be on the long side, at least for a little while the market's bullish. Everything is bullish. Going into the elections, it's going to be bullish. The market probably will not crash between now and the first week of November. What happens after the election? Who knows? But going into the election, there's going to be some powers that be that will drive the markets higher. So let's capitalize on that as much as possible right now. So that's my plan for the major markets. Go take a look at the NASDAQ. We got our buy signal beginning of September, heading up and heading higher. So this is how we capitalize on the end of year, just using our trade strategies. We wait for our buy signals. We don't just guess. We know the signals are happening. We know market's going to pull back and go again. So if I take a look at the seasonal chart again, it does give you a good idea of what to expect. It really does. Knowing what the seasonal pattern is. And share. This is October. We're right in the middle of October right now, right? Let's see, yeah, right at the beginning. And sometimes we see a little dip before the next leg up. So I wouldn't doubt that we see a little market pullback. Right now, we're right at the first week of October, right here. And it's not unusual to see a little pullback. And if you take a look at the charts, it really is not. We'll see the charts of markets are kind of moving in a channel anyway. So seeing a pullback would be very realistic. And then another leg up and then even higher. So I want to show you I'm talking about a channel. I was looking at this with someone else this past week. Because it's kind of how the markets are looking right now. I'll pull up the SPY and then switch to the chart in a second.
Well,
But
Eversley,
yeah,
being that you got that weekly seasonal chart up,
yeah,
what I did was I had looked through like past years around the seasonal time frame, September through the end of the year,
yep,
and I have to say it was almost rather uncanny
yeah,
how many of the ETFs would go bearish not long after Labor Day,
yeah,
and they would continue to go, and again, not all of them, but they would continue to go bearish until just before the end of September.
yep,
And and of course, none of the same schedule and all that. And they did it in their own way. And I was wondering, now in this year, it didn't sort of, up until this point, it only followed that pattern a little bit. Like for the first, like right after Labor Day, it went to bullish for about a week or so.
yep,
I mean, bearish. I'm sorry,
yeah,
bearish for about. And then right after that, everything just seemed to go overall bullish with some pullbacks,
yep,
you know. And so it didn't just keep dropping until like near the end of September. It just basically has been bullish, and now it's gone to the point where some of these ETFs have you know beaten their previous 12-month highs,
yep, yep.
and in some cases their 3-year highs. And as it seems to me like this year has sort of deviated from that seasonal pattern from the previous years, some previous years.
Yeah,
And
so I just focus on the major ones, the S&P, and I just track this one only. I literally only track the S&P, and the and I what I try to do is I took my shorts up here. I literally only took shorts when it reached here. I took my longs down here. I know I expect a pullback in August. I'm going to go back up one chart. I talked about this in some of the previous meetups also. I took my longs, I took my short trades the second week of July to capitalize on this sideways and bearishness. And then after the bearishness, I took my next long trades mid-August. And that was the bullish move in the markets after. So, and then I have literally been holding on the ETF trades until now. I did take a short trade somewhere here on XLI on the Dow, but that's it. But this is the one I've just been like, as John Carter would say, keep your powder dry until the perfect setup happens. So these arrows here indicate bullishness. There is no down arrows for the probabilities are all on the long side. Okay. The probabilities here are all on the long side. That's where the most likely move is. So that's why I've been kind of holding for this period. Of course, we might miss a certain few trades here and there. It didn't get bearish for very long. So I'm basically holding for the long trades. And like the data showed for the long trades from mid-September through mid-November, this starting right here, we've just been hitting targets on the long side again. So we've had a few sell signals, but very few, and most of them have already hit actually. But I'm just holding and holding for the long trades only. And I'm really would like to see a pullback before the next move up. And if I was talking about a pullback in the channel, I'm going to switch to the chart real fast. But like I said, I only focus on the Dow, Nasdaq, and S&P. Others tend to kind of follow, you know, but maybe not exactly, but they do follow. But remember, it's only a percentage of the time, so it's never 100%. You know
Of
that.
course.
Yeah.
Yeah. So well, that's good to know that you're pretty much focusing on the arrows and looking at least for this year, you're in this session or time frame, you're focusing on the long trades for the most part.
That's the most part. Yeah.
So the arrows and the long trades. Okay, that's good to know. Yeah, because this year it looks like it's a very bullish year.
So here's what I was talking about. It's markets kind of moving in a channel. And bam. There's a nice upward channel that's going on right now. And we got a nice little wedgie deal going on right now. Okay. So
Okay.
I'm talking about pullback. I expect this to pull back down to the bottom of the channel, which just happens to line up with our uptrending 40 period moving average. It's going to pull back to the 40, bounce, pull back to the 40, bounce. Eventually there'll be a breakdown, but I'm looking for that pullback, the one you saw for the chart for October, where you see a little pullback in October.
Right.
I'm hoping for that. I'm really hoping for that pullback before the end of the year. And then after that pullback, look for my next set of buy signals just from our strategies, because all those sell buy signals we have, a lot of them are in play. But after it pulls back, it will cycle up again with a new set of buy signals. It's our Donchian, whether it's our sectors, the squeeze play buy, or whether it's a T-line buy, probably T-line buy because it's a trend trade. And I'll be jumping in those right away. And these major indices all kind of look the same, whether it's the SPY or pull up DIA. Same type of thing. It was a big move up. And then boom, it's staying within a range. And I expect this to cycle back down also to the bottom of the range, right in line with the uptrending 40. Just happens to be lining up with the uptrending 40. And we're going to pull back right to the 40. It just rides the 40, just rides the 40. And it'll pull back. It will eventually pull back to it. May not be tomorrow, maybe the next day, but that's the way the market's cycling. It goes at the top of the range and then cycles back down, top of the range, cycles back down. And we could see this for days or for weeks or for months. And remember, economic situations are such that the market has been set up to rally. Interest rates lowered, presidential election coming up. Between now and the beginning of November, let's just enjoy it. What happens after the next move up? Who cares? But we just trade out. That's why we trade out signals, and that's why we just follow the plan. And so, how has your option trading been going, Gordon?
Awful. But
What's hard? What's not working out for you?
well, I've been trying my own thing
Okay,
and you sort of using your stuff as a guide, and I'm experimenting, and so, but it's but yeah, but I mean, getting back to this, it sounds like you're waiting for the pullback, and you're not really thinking to profit on the pullback in terms of doing short trades.
not right now. I'm focusing on the futures trades for the shorts. Like this past week, and you're trading the futures, right?
Oh yeah, that's my primary focus.
Yeah, that's the money maker. That's just cash flow. That's easy.
Yeah,
Yeah, exactly. So all those shorts this past week on the futures, that's where I'm. So I'm. That's the benefit of trading both the futures and options. There are certain times that are great for options if you wait for the perfect opportunity. The futures are always, especially the currency futures, are always there for you, long and short. You just trade whatever's valid, and it's just cash flow. So I'm taking short trades and long trades on the futures, but focusing on long only on options at this point in time, because that's where, remember, the 97% wins, which would really be 99% wins long.
right.
That's where the money is on a long side at this time of year between September and November. So when you look back, it's literally 97 to 99% wins realistically if you don't think about stuff like oil and metals. Um, so that's where my money is at on the long side. So I'll wait for a pullback on my next set of buy signals. And we had a couple of buy signals, I think, this week, right? Or was it sell? Like I think we had a Q sell, right? Was it a squeeze sell on Qs?
I don't recall, but
Let's take a quick look. Yeah, I think we had a Q sell and it might have already hit a target. I'm not sure. So I don't have the indicator up right now, but there might have been a short-term pullback, which we already will see. But I think when I saw the Q sell, it just gave me a little more confidence. We're going to see that pullback to the bottom of the range. So when I saw the Q's squeeze sell, it just said, hey, now there's a really good chance it's got a little retrace here, but I'm going to eventually sometime soon see that pullback right to the bottom, hit my target, and then look for my next buy signals. But I'm not focusing on the sells. I'm going to focus totally on this move up, the next leg up, the next set of buy signals. That's all I'm focusing on personally at this point in time during the next 1 to 2 months.
right. Well, that makes sense because usually the ETF squeezes, I think I'm actually sort of reiterating what Olga said earlier, that
Yeah.
it usually sort of like, well, to me, when I see an ETF squeeze, it usually means that most of the time a pullback.
Yeah, it will pull back, but it's not always a big pullback.
Yeah.
Yeah, so we'll see squeezes, like you'll see a squeeze here and quickie pull back. You'll see a squeeze here, quickie pull back. But you see a squeeze here and big pullback. So that's the thing with the squeeze sells. You might profit, small profit, big potential profit with a gap, because we'll see squeeze sells at each of these locations here. And that's where the money's made. But you don't know which will be the big move because they'll keep going against you. But there's going to be one that is the mother of all squeeze sells and gives you big profits, but you just have to be consistent because the win-loss percentage doesn't change. It's just that it just doesn't feel good because they're going against you for a while. So it doesn't feel good, but the end result is really the same. But in the process, it doesn't feel like it's the same, if you know what I mean.
Oh no, I'm sure we all do.
Yeah, so that's why I just focus on, like I think you were doing too, that the futures are just money makers for us, especially the currency futures, and you're consistent with those. Those just make you the consistent profitability and cash flow. And then options is to the time and place for both. When you do both is the best because, like I said, in December, we will not be trading futures, but options trades will still be in play. During stuff like rollover and quadruple witching, we may not be trading futures, but options trades are in play. And remember, we have a holiday weekend coming up this weekend. Futures trades will not be in play. We're not trading futures this coming weekend because of the holiday, federal holiday, but option trades are in play. So there's time and place for both.
Well, I'm glad you clarified that because that at least in this meetup, that your focus is primarily on the long trades.
Yep.
And just knowing approximately where the pullbacks are, so you don't panic, or you know of a good place to get in.
Yeah. Yeah, so I'm just going to pass unless we see the horrible news in the market and it's just collapsing and stuff. You know where your support levels are. You know where basic support levels are. You know you're in a range. If you see it's just totally breaking down, it'll just break down to here and right back up. But you don't panic. Let me pull up the monthly chart. Let me change the share so you can see that a little more clearer. Like this is the monthly chart I normally show. Pull up the SPY. The big picture. There's a monthly chart of the S&P, which just shows we're in a massive uptrend. Massive uptrend. This goes back years. Okay. This is since 2009 here's the market crash from 2008. And we've just been in this massive uptrend since 2009 with occasional pullbacks to the, this is 40-period moving average on a monthly chart, same 40-period moving average. I said it's on every chart. And periodically we pull back to the 40. For the long-term investors out there, any pullback to the monthly 40 is a buying opportunity. Any pullback to the monthly 40 is a buying opportunity. Anywhere there. Any pullback to the monthly 40, buying opportunity. This was COVID, shutdown. This big move here lasted 3 weeks. Any pullback to the move to the monthly 40, buying opportunity for the long-term investors. Same thing. Long buying opportunity for the long-term investors. Buy anywhere in this area around the monthly 40, buying opportunity. And we're just marching on. Eventually we're going to pull back again, and it's going to be horrible. It's going to be, people are going to be sorry, the sky is falling and everything else. But the reality is we eventually will have to pull. We're going to pull back to the monthly 8, and we're going to pull back to the monthly 40 eventually. And it's going to be, it'll feel painful, but in the big picture, it's really a blip. It's really a blip. It's just a natural flow of the market. We eventually have to pull back. This is going to go higher. This is going to pull back, and it's going to be in the news. The sky's falling. Don't get caught up in that. It's just normal, regular pullbacks. This opportunity. So for all you long-term people out there, you see the news is awful, follow the monthly 40-period moving average, because as soon as you get anywhere near it, for the long-term people out there, that is your buying opportunity. However you want to choose to capitalize on long-term opportunities, that's when you do it. Okay. So you got to figure out, just track that on your own. And anywhere close, it's not an exact number, it moves. Anywhere close to the monthly 40, buying opportunity to set something up, however you choose to capitalize on it. Whether you're doing stocks, shares, ETFs, whatever. I prefer ETFs because they don't go to zero. They don't gap 50% overnight. They don't find out the head of the ETF has been cooking the books like they do on some company stocks, and they drop massively. So ETFs are different. That's why I like ETFs. They're safe, they're stable, and they don't go to zero or drop 50% overnight like some stocks do. All right, so go back to the handout. There's a lot we can go over, but I'm trying to keep this within a certain time frame for the day. Because I know when we were doing our in-person meetups, we'd go 3 hours easy and then still stick around after the 3 hours and keep talking. Those of you, like, I know Larry's been to those in-person deals and maybe a few other people here, but we go a solid 3 hours and then hang out some more after that. So I've been trying to keep this to less than an hour and a half. So if anyone's interested in working with me on this in more detail, I charge $17.50. That's for this actually 6 strategies actually changed to 8. We're now doing 8. We added the squeeze play buy and sell, the one I showed you earlier on the stats that are like the 98% wins, like that one. Added that more recently. But I do all work with you one-on-one, whether in person or on Zoom. If you're around the South Bay, I'd rather meet in person if possible. But if that's not possible, then we'll meet on Zoom. And whatever we need to get you up and running and getting the trades placed, like I said, time is important right now to capitalize. I just showed you September through November, but I always say it's October through April is the best time to trade because we get the biggest, best trends. We know the big trend going up is from now until December, but there's also another trend. It could be bearish or bullish, but right after the markets open in January, there's usually a big move one way or the other. One way or the other is going to be a big move and great potential profitability there if you're trading these strategies. So we want to be able to get ready now to capitalize on markets that are moving right now, plus be ready for the next big move that happens right after the beginning of the year. So this is a good chance to capitalize and build your accounts and learn the strategies and get it all down. And like I said, I'll work with you one-on-one. I do like to go over wins and losses with people and make sure they got it. And also don't assume your trading platform works right. You always have to double check your trade execution. There can be problems which you'll never know about unless you find the trade problems yourself. So it doesn't matter what size account you have, we can make it work for you, but the more capital you have, the easier it is. If you consider about how much capital you have to work with, futures is always easier with a smaller account. Options is easier with a bigger account. But you're looking at least a 10 grand account with options to really be comfortable, minimum 10 grand. And that doesn't even let you trade every ETF. Futures is different. You trade a smaller account with futures and because we have micro futures. So, and I can tell you the difference between each of those. If you want to give me a call or set up a time, I can chat with you about all the different programs we have and what works best for you. The reality is of your schedule is also a factor in personality. I like things to be very exact. Some people don't have time to be there in the morning to do certain trades because they have to work during the daytime. Maybe futures are better for you. Maybe options are better for you. It just depends on different circumstances. So that's why I like to talk to people ahead of time to find out what would really work best for you. And then we can proceed accordingly. If you want to do futures, that's the price. And for my meetup people, I will take $200 off this price. And I will take $200 off this price. Let me know by Wednesday. Let me know by Wednesday, and I'll take $200 off the price for either the futures and or options. I think I'll give a bigger discount actually if you do both. So let me know, and we get you up and running ASAP. I can have the charts for you readily available on Thinkorswim. Otherwise, what you just saw on our charts with NinjaTrader, which is free to use. But either NinjaTrader or Thinkorswim you can use. And I believe you can do other platforms too, but you might have to do a little bit of work programming if you use one of the other platforms, because not all of the indicators are readily available unless you do a little bit of work to tweak existing indicators on those platforms or acquire indicators for those other platforms. But NinjaTrader and Thinkorswim is readily available. I have those for you, no problem. So let me know. Do you have any questions? Oh, let me show you the website also in case anything there. Valid trades and share. My email and contact information is on the handout, but you can also go to my website and there's a contact us, and on the form, you just fill it out with your information and I will get it and we'll set up a time to chat. I would like to know what your particular circumstances are, any issues, concerns you have, and then figure out the best way to move forward. And I also want to make sure you have realistic expectations. I have had people, I've asked, hey, if you have a $100,000 account, how much do you expect to make from that $100,000 account? And I've had in 1 year, and I've had people tell me, well, if I have a $100,000 account, I should be able to make at least 500,000 in each year from that. I'm like, okay, we need to talk. Okay, let's, we need to talk. So that's why I want to make sure you have realistic expectations of what to expect, percentage return on account. You don't just get rich overnight. It's not a get rich quick scheme. This is a business. You push it like a business, have realistic expectations, follow certain rules for your business, then you can have predictable income. Futures will give you more predictable income than options. Options can be very good depending on your lifestyle and schedule and personality. Personality is a big factor also. But both can be very profitable, but they're very different things to trade, very different. I know some of the options people are afraid of futures, some of the futures people are afraid of options, but once you learn them, it's like no big deal. It's just a thing, a way to make money, and they're not a big deal at all. Not a big deal at all. But all the details on the website for coaching. Take 250 off futures on 250 off, excuse me, 200 off options, 200 off futures, and just let me know by Wednesday, and we'll start setting something up for you, and I can meet with you. I have a lot of free time, so I can meet with you mornings, some afternoons, and evenings, and Sundays. I don't do any coaching on Saturdays. Saturday's my time. Saturday's my time for Brazilian Jiu-Jitsu and relaxation. So that's my time on Saturdays. So I don't do any coaching Saturdays. But other than that, I'm pretty flexible. All right. Unless we have any questions, we're going to wrap it up for now. I'll probably do 2 more meetups for this year. I'll probably do another futures one later in October and 1 more options one in November, because we're still going to be trading options through the end of the year. So, but I really want to do this one now, because this one, timing now, we should be trading the strategies on the long side now, preferably. Maybe take a short here and there, but don't overload on the shorts. Focus on where we expect the money to be, and maybe take an occasional short because a little bit of a hedge just in case, but don't overload on shorts. All right. So if you want to talk to me, call me later this afternoon, message me on the forum or email me, and we'll set up a time to chat and go over your circumstances. Otherwise, I'll be in touch with you, and we'll have another meetup in the next 2 or 3 weeks. You all have a good day.